Good morning. Futures are pointing to a lower open following Thursday's flirt with record highs. Disappointments from Microsoft and Google helped damper buyers that were beginning to feel a little bit better about the strength of the economy and the performance of many companies. Adding to this dim outlook, Detroit filed for bankruptcy. While it isn't any surprise, the city has been in trouble for years, it's still the largest municipality in American history to file for bankruptcy. Kevin Orr, the emergency city manager, said the city probably owes $18 billion. Hope you didn't loan them any money because you aren't going to see it. Microsoft tried to put a good spin on its earnings, but it didn't work as investors began dumping the stock this morning. The Surface tablet, while receiving some nice reviews, just didn't sell very well with consumers. The tablet business cost the company almost $1 billion as they wrote off $900 million in losses. Revenue did rise 10% to $19.9 billion, causing the CFO to crow about record revenue, but it was below the expected $20.7 billion. Earnings came in at 66 cents a share. That's far short of the estimated 75 cents. And Microsoft slashed the price of the Surface tablet over the weekend as they tried to generate some sales. Look, we all knew the PC business was declining, and Mr. Softy is also learning that it can't keep charging those inflated prices for their Windows software. The stock is down almost 7% this morning. Google is also down about 3% this morning after it too disappointed. 6 different brokerages dropped the price target on the search giant after seeing the margin erosion that's taking place. People aren't liking those internet ads, and Google is trying to do more mobile ads, but those are charged at a cheaper rate. The ad business that is Google's bread and butter, and revenue did increase 19% to $14.11 billion, but that was below expectations. Costs up a whopping 27%, and investors are complaining that Google's just wildly spending money on all these kind of crazy far-flung projects. Motorola also continues to be a headache in this quarter that cost the company $342 million. The one bright spot this morning, well, that's GE. General Electric posted a slight gain in net income in the second quarter and said that U.S. operations are picking up steam, pun intended. GE said that it earned $3.13 billion, up from $3.11 billion a year ago. On a per-share basis, they earned 30 cents a share. That's up from 29 cents. Revenue did fall 4% to $35.12 billion, and CEO Jeff Immelt said orders in the U.S. showed strong growth. That's an improvement from recent quarters when he expressed caution about the U.S. market. Immelt said emerging markets remain strong and that Europe has stabilized but remained weak. The company's orders for new business rose $7 billion last quarter to a record $223 billion, and Immelt says he expects profits to grow in the second half of the year. The stock is up 2% in early trading, and that's what's happening before the bell. I'm Deborah Borchardt. Good luck trading.